But without any further delay, I'd like to kick off with our first speaker this afternoon. Richard Davies is the CEO of banking at Revolut, and before that, he worked at TSB, Lloyds, Barclays, HSBC, and Oak North Bank as well, I think. Good afternoon, Richard. How are you?
Good afternoon. Very good to be here. I'm great.
Excellent. First of all, we're going to be asking all of our speakers, firstly, what their advice is in these challenging times for entrepreneurs, for other CEOs who are out there in this world. What would your advice be if you're a leader at this time?
Yeah, so, I mean, I guess in some ways, we're already pretty well into the thick of this crisis. So some of what I'm going to say probably, hopefully, has already happened in most businesses. But I guess I'd sort of break down what's going on into three phases. Mm-hmm. You've got the first phase, which is one of, I guess, maximum uncertainty and some chaos, where, I mean, that sort of happened, I guess, during March, and a pretty unprecedented event where you saw countries all around the world go into some form of a lockdown very rapidly, with therefore lots of impact onto your own staff, your supply chain, and so on. And I think we're probably now entering into the sort of second phase where you get pretty better sense as to what the likely duration and impact is on your business, and perhaps markets function a bit more normally from that. And then thirdly, and I think this was still pretty much guesswork, is how long is the sort of aftermath? Clearly from the global financial crisis, we saw many, many years of aftermath, particularly in some countries in the Eurozone. And so how persistent is going to be things like unemployment, government debt, and changes in customer behavior. So I mean, I guess phase one, as I say, hopefully most businesses have already kind of acted on this, but priorities have to be really getting staff and customers safe. Much easier for a sort of digital-only business in terms of customer safety. Clearly harder if you're a physical business there. But staff safety is really important. Supply chain, I mentioned that. You're going to see impacts kind of all around the world, given that the lockdown is global, and making sure all your suppliers are able to cope and keep supplying you and your customers is critical. Having people productive and healthy under remote working conditions is critical if you want to sustain progress in the company. And then I guess assuming the company's taking some sort of revenue impact, which I think many people have in this climate of varying degrees, then you also want to be thinking about how do you make things leaner and more cost efficient, and ensuring you've got the maximum possible funding runway to sort of last through certainly phase one and phase two of what I mentioned earlier. And I guess
as a consumer-facing digital business, what has Revolut seen in terms of its customer growth, say, since the start of the year? What impact have you guys seen?
Yeah, so we've been really happy, actually, the fact that we've seen pretty strong continued customer sign-up. We have brought down marketing somewhat, and so we are still seeing pretty good organic customer demand come through, which I guess is one of those big unknowns, right, as to what do people do in this sort of time when you've just never seen this sort of situation before. I guess we have many use cases around us. I mean, our origins were a travel card. Clearly, travel's been very impacted, but we have many, many use cases, right? Stock trading or crypto or just day-to-day banking or whatever. So it's been really pleasing to see that sustained, and that's both really on the retail side and on the business side as well. So certainly from our point of view, we've been, I guess, happy to see kind of the ongoing customer demand come through. Clearly, you have seen, I guess, customer transactional behavior shift quite a lot. So I think published some of this data in some of the papers to help shed some light on what people are doing economically. But you've seen people shift transactional behavior, a lot less physical transactions, a lot more contactless transactions, sort of less frequent shops, bigger value transactions, some more shopping at local newsagents, a lot more streaming and gaming, all that sort of stuff. And we've also seen quite a lot more activity in sort of the crypto and investment space as well. So definitely some customer behavioral changes.
And what's your sort of long-term prediction of what the fallout from this crisis is going to be? Do you anticipate that we're going to see consolidation in your sector? Do you think we're going to see a rise in acquisitions, M&A, as a result of what's going on at the moment?
Yes, in brief. So, I mean, I would say, actually, I think I was on a podcast last year and I said that we're probably approaching a point of that anyway. Just when you think about the sort of cycle of fintech, that don't know when you kind of start the current cycle, but sometime sort of around or after the last financial crisis. And you've kind of got a maturity wave there where lots and lots of people start things, it sort of grows, some people get scale of funding, etc. And naturally we'll see some consolidation from that. And I think this crisis is just going to really accelerate that and exacerbate that, where yes, you will see consolidation amongst sort of different fintech players. I think you'll also see some of the corporate venture arms of banks probably trying to take advantage, trying to play catch up on a few things. And I mean, there's clearly also quite a number of PE funds that do special situations investing, and this is a pretty special situation. So I know they've got some firepower primed to come in. So yeah, I mean, there's all sorts of interesting opportunities out there. I think it's fair to say. I mean, to name one, right? I guess non-bank lenders, quite a few having quite a tough time right now. I know where they may be struggling with covenants on wholesale funding facilities and so on, and the sort of opportunity to put together a sort of bank deposits, i.e. stable low-cost funding with that sort of non-bank lender that may have a very good origination and underwriting capability is a very obvious thing that might come out of this.
And I think Nikolai teased earlier this week or last week that acquisitions could be on Revolut's horizon as well.
Well, listen, we were fortunate enough to close our own $500 million fundraise at the end of February, so we certainly have reasonable funding in the firm. And I think he was kind of actually mentioning some sort of non-FS pieces that would be sort of add-ons that might help bolster the sort of end-to-end sort of super app proposition we're developing. But yeah, I think, listen, there's nothing kind of firm right now, but certainly we are in the fortunate position that we probably can look at opportunities if the right sort of thing arises.
And what technologies do you think are going to be sort of shoved into the limelight by this crisis? You mentioned non-bank lenders, but what about what technologies are you guys looking at and investing more in, given the new sort of world that we're working in now?
So, I mean, clearly, wider world, right? I guess people like Zoom and Slack and Microsoft and anyone doing remote productivity tools has done pretty damn well in the last 8 weeks. So clearly, accelerating trend around all of that. I mean, kind of closer to home for us. I guess technology is probably not quite the way of putting it, right? I think we're very interested around the end customer outcome. So how do you provide a great customer experience? How do you provide great customer value? And how do you sort of bring together this super app that's really combining a whole range of features and services that customers need in one place, very easy to access, and as I say, great value. So I mean, clearly, technology is at the heart of what we do. We do like to build things where possible ourselves. Equally, we will partner, particularly to sort of bring in capabilities we don't have necessarily the full skill set, or to bring the MVP in day one. And we also clearly we use everything, the sort of all the buzzwords I guess are being used, but it's not really kind of how we think about things. And actually, one of the things that I really like about Revolut is it's not everyone goes around talking about AI and machine learning all the time or whatever. Right? It's like use the technology as the right technology to solve the customer problem that creates the greatest value for the customer. So I really think that's the right approach, and I kind of hate it when people get really caught up on sort of the technology as opposed to the customer, if that makes sense.
Yeah. For our audience, don't forget to ask your questions for Richard, because we're going to be hopefully bringing a few of those in towards the end. Richard, obviously the UK government has come forward with a host of measures to protect businesses. As someone working in the fintech industry, what do you make of their response to coronavirus and the support of our industry?
So I have to have a lot of sort of empathy for them first up, because wow, in terms of something to try and deal with. I mean, with the premise, I guess, getting ill as well. I mean, God, it's a pretty tough set of cards to play. I think things like the furlough scheme and so on seems to have done a pretty good job in terms of moderating the immediate impact on unemployment, which certainly if you look at other countries, dramatically faster rises in unemployment, and kind of what I mentioned earlier, that kind of persistence effect around the aftermath phase. I mean, hopefully that will create a sort of better macroeconomic conditions for the future. Clearly at quite a significant cost when you look at the sort of government debt projections that are coming out. And I guess that's kind of a big one, right, as to how does it all get paid for and what does that do to inflation, tax, and so on. I mean, I guess more on fintech. So I mean, I'm so pleased to see the sort of startup venture enterprise scheme to try and plug a gap there. The bounce back loan scheme has been great to sort of, I guess, provide a sort of simpler, small facility for a large number of businesses than the civils piece has allowed for. I think there's been a pretty broad response. You can clearly always pick holes in things, and hindsight is always a wonderful thing. But I mean, I think they've thrown themselves at this pretty forcefully, and certainly probably a faster response than we're seeing with the GFC 10, 11 years ago. So, yeah, I mean, I know there's calls for sort of opening up access more widely to sort of cheaper funding schemes and so on. But I mean, from my own point of view, that's not particularly sort of something in question right now.
Mm-hmm. I want to ask you a little bit about your previous experience in the world of banking. But first of all, you might have heard I said a minute ago we're doing a poll on the future of bank branches and whether they'll still be a thing in 2030. Obviously, Revolut not looking to build branches anytime soon. But what's your take on the high street in this story and the impact of coronavirus?
Well, clearly there was a trend that we're seeing erosion of high street. I mean, that's not a new trend. I guess last 20 years really, since the dot-com boom and the rise of e-commerce, there's been a sort of constant move that way. I mean, you've got to think this is going to significantly accelerate that, because if people are unable to shop physically for multiple months, then you're going to get used to buying clothes online or whatever it is you may not have done in the past online. Clearly food, a very relevant one, where been massive surge. I was talking to the COO of one of the major supermarkets in the first couple of weeks of this, and he's just saying this is significantly higher than our Christmas peak already, and that was back in March. So you've got substantial moves there in terms of, I guess, customer behavior. To be honest, right, I think diversity is good. So the problem, right, is that not everyone wants a purely digital e-commerce experience. I mean, for me, actually, I love it. It's great. It completely fits me. But I know, and it's not just an age thing, but there's quite a number of people out there that do really value that physical experience. And yeah, I guess that's the really hard thing, is how do you have the critical mass, that diversity? And I think if you wind out 10 years to 2030, that's going to be pretty hard to maintain, I think, in quite a lot of high streets, right, where it's a small town and therefore there's not the critical mass to sustain it. I think in a city centre of a London or a Manchester, there's always going to be critical mass there for the physical retail experience. But I think it's going to be hard for some parts of the country to maintain that. So yeah, I think we're going to see an acceleration of that with COVID.
And what about the sort of digital strategies of some of those incumbents? You've had experience inside them. When it comes to the sort of changes and the response to the crisis, what do you think's happening to their digital strategies? We've seen, brands like Bow sort of disappearing from the landscape. Do you think what do you think their mindset is at the moment? Yeah,
so I guess it would be really interesting to be inside right now, and I can only guess because I'm not. I think I know there's been challenges in terms of provision of customer service in this current climate with, for example, branches, call centers, highly challenged by this in terms of maintaining social distancing, staff absence, all these sort of aspects that are hard. And I sort of used to be in charge of some of this in a major bank, so I can imagine the circumstances there. And I think that will have to drive a shift in terms of some of the practices there that I guess we're starting to be introduced anyway, but it must drive a really, really fast acceleration of some of that. I'm pretty certain that's happened already in a number of banks to try and cope with this. And I think in general, shifting gears and sort of tripling down on digital investment and remote capabilities must be the incumbent response. I mean, I was interested by the Bow demise. I guess wasn't super surprised, to be honest. I think in general the greenfields sort of new brands are pretty hard to pull off. It's not I'm not a fan of them. I think it can create some benefits, but it's very hard to replicate the circumstances of like a Revolut or N26 or whoever, where you've got people who have just deep passion and equity motivation in the business, and sort of the talent you can attract and all these things. It's very hard to replicate that in an incumbent. And clearly incumbents have some advantages, right? Like a massive balance sheet with low cost of funds and massive existing customer base and so on. So I think if you're going to go do a greenfields play, it's got to be very, you've either got to give it a lot of the degrees of freedom and some of the motivational levers that you see in the true startups, or you've got to make it play far harder with the sort of core brand, customer base, and balance sheet advantages that the main bank has. And my sense of Bow is it kind of got caught in the middle.
We've had a few questions come in from the audience, which I want to turn to. The first question we've had is, how is the current crisis affecting your expansion plans? And with particular mention to the US, what's happening with expansion at the moment?
Sure. So, I mean, we actually launched the US publicly on the 24th of March. So that was early on in the whole Corona crisis, clearly just after lockdown had commenced. And we did have a bit of discussion as to, is this the right time to do so? But then, as I said earlier, so if you've got the 3 phases and what are you going to do? Wait till potentially 12 months till sort of any aspect of lockdown's over? And we thought it was by far the best thing to actually get out there. And while probably you can have a slightly more muted level of like marketing activity and such like in this current climate, it wouldn't necessarily be appropriate to sort of shout in the way perhaps we might have done otherwise. But we are seeing good uptake actually in the US. We're seeing good customers join us, and that clearly allows us to keep iterating the proposition, and a big focus there on really developing the product features to ensure the best possible products in the US. And actually the same is true in other countries, so in Australia or Singapore. And actually, again, speaking of launches, we launched the Lithuanian bank 4th of May. So we're kind of gradually rolling that out over the last few months, but we sort of publicly opened it up fully to all 300,000 Lithuanian customers in early May. And so, yeah, I think we continue to execute the strategy we had in place before this. We don't necessarily think any of the core strategic principles are invalidated by this. In fact, they probably are validated by this, as mentioned earlier, with the continued pretty good organic demand from customers.
The next question is on the changing habits of your customers. How easy or difficult was it to manage the change of users from FX travel users to day-to-day banking? I guess you've probably seen a drop-off in travel spend. And are there any lessons there?
Yeah, so that's not a recent thing. So, I mean, a lot of credit to Nick and the team have been working on this for at least a couple of years with quite broad diversification of what Revolut does. So one of the things when I joined back in July, I was sort of pretty pleasantly surprised by was exactly that degree of diversity. So majority of transactions are domestic. You've got subscription products, both the premium and metal side. We've got business accounts. We've got crypto. We launched stock trading last summer. So there's quite a lot of use cases now for Revolut, quite a lot of revenue streams. And I think that's seen us really good in the current time because, for example, crypto, we've seen a lot of activity on that, which has to a fair degree compensated for some of the drop in the physical card transactions and things like travel, which, as you say, was the origin. So I think it's been kind of a real evolution over the last couple of years, maybe in 3 years, on that front, with sort of every year more and more products and customer use cases coming on stream, and therefore more and more reasons for people to use Revolut.
Well, just a question on the point of stock trading. Our next speaker is Adam Dodds from Free Trade, and I'm sure we'll be talking about this. What response have you guys seen over the last couple of weeks and months with the market sort of chaos out there? What's the impact been on the number of people using stock trading, the features?
Yeah, and listen, I think we kind of view it as a wider sort of investments. So from an investments point of view, we'd sort of talk about, yes, stock trading, and that's an area we want to expand our proposition in over time. Currently, we offer US stocks on a commission-free basis. But also crypto, I mentioned earlier, commodities. So we launched gold reasonably recently, so you can go and get very easy exposure to gold. And also savings. We also launched a high-yield savings account earlier this year. So it's sort of that whole gamut of things. And we've definitely seen a lot more what I call kind of investment / trading activity by customers in this period. I think it's kind of a classic response to a crisis. People take positions early and try and take advantage of what they see as maybe things that are mispriced, or perhaps are seeking kind of safe havens, a gold or a crypto, sort of uncorrelated safe havens that give some sort of, maybe you've got your equities are plunging, but you've got at least some stability in those. And certainly the high yield savings account, which is deposit insurance protected, is a great safe haven where you're getting market leading yield with the deposit insurance protection behind it. So yeah, I'd say all of those we're seeing pretty good customer uptake on in the last couple of months.
One of the topics which is important, I guess, to entrepreneurs, to CEOs out there, it's just been asked in the chat by John, is the topic of going back to work. Twitter has said staff can work remotely forever. Apple and Google are both starting to plan for employees to return to work. Will Revolut allow staff to work from home indefinitely? What's your thinking about home working in the future?
So I think too early for us to give a definitive position. We're definitely talking about this quite a lot. And I mean, we've seen, I'd say in general, productivity be pretty high, maybe even higher than it was in the office. There's clearly a significant cost attached to having offices. And I think there's equally something around just I think creativity can be helped by sort of face-to-face interaction. And I think also things like mental health can be helped by some human interaction as well. So that's not just, I guess often video calls are quite task-focused, professional task-focused. That sort of slightly more informal interaction you get in the kitchen over a cup of coffee. So yeah, I think it's one we're thinking pretty carefully about. Very interested to see Twitter's announcement. And yeah, when we're trying to reach a conclusion on in the near term.
Interesting. Someone's asked, will Revolut consider partnering with banks to become a mainstream banking player? I guess, partnerships were mulled a lot in the early days, but, do you guys think that might be an option in the future?
Yeah, listen, I guess we are looking to become a mainstream banking player if we're not already. So hence we are, and it's public, right? We're underway with bank licenses. We have our ECB bank license in Lithuania that we're rolling out for Central and Eastern Europe. And that is so we can provide sort of the full range of services, including, for example, overdrafts and deposit insurance protection behind all of our accounts. I mean, we do a lot of partnerships as well, right? So I mentioned the high yield savings product earlier, and that is via a partner bank. So you clearly have in the bank a whole range of different, in the market, a whole range of different banks. And particularly banks that specialize in, small banks that specialize in loans and savings are typically looking to gather deposits and can offer high yield because they're investing in specialized lending products. And it's all protected by the government deposit insurance scheme. So that's a great example of where we have partnered with what is a smallish bank to offer a really great value, really easy experience savings account to our customer base. So yeah, I think partnerships is very much part of what Revolut does. Though I don't think it's about partnership with the mainstream banks. It's about, as I said earlier, customer value, customer experience in sort of one super app that helps you with all your financial services needs. And we're aiming to underpin that for our own banking licenses rather than resting on HSBC or something.
Awesome. Last question from the audience. Where will the majority of Revolut's expansion focus be after your recent $500 million fundraise? So I guess we're talking about locations, but also you mentioned acquisitions, Nick did. What else could be on the cards?
So, I mean, expansion-wise, the pitch to investors was really that we're doing pretty well in Europe and we want to double down on that and really continue with that. And then we have a number of markets that we have got into, US, Australia, Singapore. We want to make sure those work, and particularly the US is important, right? It's a big market. So yeah, listen, we'd love to, I guess, go even further afield than that. But right now the focus is really on ensuring that the places we have entered, we're doing a really great job, have the sort of full set of product features that we offer in Europe in those markets, but also having specific market features for that market. Like for example, the US, the get paid 2 days early type thing. That's is really important in that market, given it's a fairly slow ACH clearing cycle. So, yeah, I think the current focus is really about, let's say, more in Europe, lots more to go there, both expansion of products and customers, and then the countries we're already in, looking to really make sure we get those as right as possible and keep learning about what customers need there and how we deliver for that.
As opposed to planting your flag in lots of new geographies at the moment?
Well, I think we're in like 35 countries right now, which I think is certainly most of anyone that does sort of the services we do. So I think we're pretty active in terms of expansion in general. But clearly, you want to, I mean, we take a very iterative approach, right? So you want to get a market live. You want to really iterate the product market fit, really make sure you understand the customer needs in that market, because different customers, different competitors, different cultures, and so on. So you've got to make sure you really nail it, both with what we have in the European product set and ensuring that's fully launched in the country, as well as I say, really making sure you're nailing any local specific features that will make you really stand out. So yeah, I think that's the current focus. But listen, this place moves super fast, so and I'm not saying we're not going anywhere else, but that's the focus right now.
Excellent. Very last quick question from me. What do you think the lasting impact of coronavirus will be on your sector in fintech? When we look back in a few years' time, what do you think we'll remember as the lasting impact here?
I mean, I guess sector for us, we're sort of so broad that I wouldn't sort of put us in digital payments or stock trading or credit, or it's sort of very broad based. I think, therefore, if you kind of think about FS and the lasting impact from that for this, it's a lot of the things we talked about earlier. So that emphasis on ability to have digital and remote, both for staff and customers, that consolidation type wave that's likely to play through. And I'd thought, hopefully, quite a bit more product innovation that helps people around some of the behavioral change they're seeing with COVID, right? So help people to make that shift to sort of the environment we're now seeing. So yeah, those are kind of my three things. Well, we look forward to seeing it. Brilliant stuff. Richard, thank you very much. And to our audience, next up, we've got Adam Dodds, the CEO of Free Trade. So don't go anywhere. Thanks, guys. Thanks.